Hey everybody, it's Josh Taylor doing the Forex Market Preview for January 16th, 2013. And it's been a month since we did a Forex Market Preview. And I apologize for that, but usually mid-December through the first week of January, I am traveling a lot in between sending signals and everything else. It seems like I work 24/7 year-round, and that's pretty much the time I try to take out to go see some family. So I'm going to tell you up front, this market preview is going to be a little bit more in depth than normal because I really want to go through how I'm analyzing the trades that I send out. So I want to really dig down. We're going to analyze a lot of trades, and I'm not looking at any of these in advance. I'm actually going to analyze these live while you're watching this video, so you can see a little bit inside of my head of what I'm focusing on when I'm looking at currency pairs, including trends. We'll see what we're going to do here is the technical analysis side of it. I'm not going to get into the fundamentals here. It's way too in depth to do that because I'll spend a lot of time reading news reports and market updates and what's going on with that. But we're going to focus on that because I really want to focus on educating our customers as much as possible. I get a lot of questions here. You know that we have a coaching program as well, which at this point we are ending because we're getting overwhelmed with people that want coaching by me, and I just don't have the time to do it anymore. So I'm in the middle of developing a new training course. It's going to end up being what is finished over 40 hours. It's going to take me several months to get this thing finished. We have a lot of customers that already have purchased the course, and it's going to have some very detailed training modules showing you how to determine the trend, how to pick optimal entry and exit points on your profits, calculating setting up a risk management plan, candlestick patterns, all kinds of things. That is going to be very detailed. It's going to be a lot of fun. Now the cool thing is you actually can get the training course for free. It's normally $597. We do have some customers paying for that. But there's a link underneath this video that says get the training course for free. If you click on that, there's a little video there that I shot right before Thanksgiving. We ran this little special. It was pretty cool. And then we offered customers to get the course for free. So what I would suggest is after you watch this video, click on the link underneath the video and go watch the video on how to get the training course for free. You definitely want to get your hands on this. I am purposely making this the most comprehensive and detailed training course on Forex available as best as possible. I've been trading now for 8+ years, and I've been through everything you could possibly imagine. And I'm going to share insider secrets that a lot of traders don't let people know in that training course. So you definitely want to get your hands on that course. That'll be absolutely life-changing for you. But in the meantime, let's start analyzing some of these trades. The first thing I'm going to do here, and I'm looking at the Euro USD. I have not looked at any of these charts. I'm actually going to do this live. So if I stop for a second because I'm sitting there analyzing, you'll know exactly why. So first thing I always do, especially when we're taking longer term trades, and with our Pro Signals Direct customers, that we've built this service around longer term trades. And the last few months has been very difficult. The market has been very jumpy. The fundamentals in the market, which is the economic factors that causes the markets to move, have been very jumpy. And so it's been a little tricky market. We have closed out some decent pips with Pro Signals Direct. Right now in January we had, I think we're up a hair under 300, which is a little slow. Even in December we did very well for that month. But we are still doing quite well. We end up clearing out 2012 with 9,559 pips, which is pretty awesome. It's going to be difficult to find any service that has consistently been producing those kind of results. 2011 results was 84.75. So we have a lot of really cool new additions we're going to be adding into the works here for Pro Signals Direct this year. And we are going to be looking at taking that pip count well over the 10,000 mark. We're shooting for 12 as we start implementing some really serious long-term trade opportunities and digging deeper into cross pairs, which are pairs like the CAD yen and the Euro CAD and things like this. So We're going to be analyzing a ton of charts today, and I want you to do, if you take notes, stop the videos, whatever you need to do, but really sit back, take the time to watch this video. It's going to be long, but take the time to get an idea of how I'm looking at the market. Okay, so the first thing I always do when I'm looking at the market is look at the weekly chart. And here's what we're looking for. The first thing to do is try to determine where price action is moving at this point and what the trend is. Okay, so right now you can see long term, this is a weekly chart on Euro USD. Ever since around April 2008, so we're talking going on 5 years, this pair has been trending down. And the way to tell a downtrend is you have lower highs and lower lows. Now here's a high, here's a low. It comes back up to a lower high. In other words, this high is lower than this high. You see what I'm saying? And then to a lower low, right there, right? Then we came up to almost to this level, the 5,000 mark, and rejected, but it's still a lower low and pretty much a bottomed out low here at the 1.2 mark, which was actually last July. So right now this currency pair has moved since last July. In 6 months, 1,300 pips. Okay, so the key here that we're looking for is we're going to start laying out. We're looking for trends. We're looking for channels. We talk about this in all my other videos, that currency pairs trade in a range 80% of the time. Your goal is to find the range, find the channel, find the support and resistance points that the market is going to react to, and look for trade opportunities around those. Okay, so first of all, I'm going to draw a trend line, and I don't even know if this trend line is going to work correctly. It's kind of in there. It is somewhat trending. I would, it's not the greatest trend line. It's not really one I would bank on, but I would definitely say if this pair came up to this level here, we would have something solid. But more appropriate as a support level that we have around 1.2. Now we're not anywhere close to the area. So what we're trying to do is determine right now, this week and next week, what kind of trade opportunities we can look at. So what I'm going to do is start drawing out some key levels. And the 1.35 is a series key level. If you go all the way back here, you can see right here, price really hesitated in this range. Even came down to this level here. Eventually, when it hit it again, it hesitated again. Once it broke through the support level, remember the floors and ceilings we talk about. Once it broke through, it had a hard time breaking back up and eventually stayed below. Okay, so this is a key level. 135 mark is a key level. Eventually, when price came down here again, doesn't mean it's going to respect it every time, but even if this on this day came up, reached it, and dropped like a rock. You see that major pin bar reaction? Okay, once price finally broke through, same thing. It bounced off that line for a while. It rejected again. Once it came back up, it hesitated here a little bit, and now we're working our way back up. So here's what we need to determine. And here's what I need all customers to understand, and what's amazing in this business, I've been doing this for 8 years. I have built my entire financial future on being a trader, and I've done very, very well. But one thing I've come to know is that you're not going to knock it out of the park every single time. If you go back and look at our track record for Pro Signals Direct even, there are months that we've hit 20-30%. 2,000 pips, 2,400 pips. We've had some amazing months, 1,600 pips, 1,700 pips. And then months where we've cleared 200. The last couple of months, November and December, was a very difficult month to trade as it is, but we still came out ahead and we still moved forward. What happens is you get a lot of customers that say, hey, man, we lost 4 trades in a row. You guys suck. Therefore, we're canceling the service. Well, the problem with that is most people that are in the Forex market right now that are looking to trade Forex have a cookie cutter mentality. They want it, not a cookie cutter, I'm sorry about that, a microwave oven mentality. They want their trades now, they want to win now, they want to double their account now, and I'm telling you, those people are never gonna survive. You have to think as an investor. Think about Warren Buffett. When Warren Buffett is trading or buying companies or whatever he's working on investing it wise, his focus is not, how can I take $2 billion and double it in a matter of the next 3 months? He's looking at the long term. Guys, you guys want to get serious about building wealth, you got to start thinking about the long term. You got to be able to take the good with the bad. We're going to have some down days, we're going to have some lost trades, and we're going to have some good times, good trades, good months. Okay, so let's focus. Now let's look at where we're at trend-wise. This thing has, for the most part, been channeling between 5 and 2 for the last couple of years. Going down, up, and now it's kind of working its way back up. So right now on this weekly chart, and we can draw in, I'm going to zoom in here a little bit more. We can actually draw in a trend line here that see that this thing has been solidly trending upwards. Okay? So because this is going upwards, there's two types of trades we want to focus on. One is called you're trading with the trend. Two is a counter trend trade. Now, counter trend trade is a lot more risky than trading with the trend. However, trading reversals and counter trend, if you know how to do it right, can be extremely profitable. So looking at this weekly chart, I can see that prices here right at this level. Now let's figure out what this level is in here, because if I can see price come down to right here, which is about 132. Actually, if price would come down, it's probably going to come down even deeper. So I've got to look at the next candle. Okay, and this candle is already looking like it's neutralized, and even though it is slightly up, it's still going to be probably an end of blue candle, so it's going to be considered an up day. But I would say price would come down to this level here, 131.50, which is actually, I think it's where we bought that a couple of days ago and actually did very well in this trade. If price would come down to the 131.50, we could have a bounce right off this trend line. Okay. In fact, if you look at let's look at the 131.50 range right here. This candle here, this this line, this darker thick line. Okay, we can see that 131.50. Boom, nice rejection there. See how price is rejected here. It's struggled in this range in here, of course. Okay, rejection here, rejection here. Once it broke above right here, it stayed here. So I'm going to say 131.50 is an excellent area to be looking to buy. Now this is on a weekly chart. We still have to dig down to a daily chart. So here's what I'm going to do. I'm actually going to take out Notepad. I'm going to say buy. I'm going to put the euro. Yes, I'm going to say buy 1.3150. Okay, now I'm not going to look at my stops on this chart. If you're going to trade off of this level chart, then that means you had to put your stop down in this area here, which we're talking about a 200 pip stop. You don't want to do that. So to get the exact entries, we're going to dig down to narrow down into higher time frames, daily 4-hour charts, things like that. We also see, and when we showed you earlier, that this 135, this 135 range mark is a major key level. I am expecting if price would come up to that level, we were going to see a bounce. So I'm going to say we would be willing to sell at 135. Right? So that's a weekly chart. That's just me analyzing a weekly chart. Now remember, the counter trend is always more dangerous. You see this thing squeezing in here, almost in what's called a panic pattern. This thing would eventually probably break up as long as the euro continues strengthening, which it looks like a lot of the euro weakness that we've had recently, previously to all this stuff, was when we had the eurozone issues going on, is really starting to subside. I'm expecting the euro to take off. But oops, I didn't mean to put that in there. So anyway, ultimately we will see price break above this and squeeze up into this thing most likely. So a buy opportunity would be a much better opportunity. But we are about 150 pips away from being taken into 130 pips away from taken into a buy entry, and which we already did buy. I think we did buy already at 31.50, or we bought either at 30.50 or 31.50. I forget. I think it was at 30.50. Yeah, we bought and took this thing all the way up. We did very well on that. I think I actually closed at 150 pips, a little bit too early. I should have stayed in because my target, look at my profit target was 32.80. Look at it, 32.83 came right up to my profit target. Now we're seeing momentum slow down. So we want to now go to the daily chart and take that same data and see how it fits into this. Okay, so let me back this out. Okay, here's the trend that we're working on right now that we just drew out. You see it's the same thing. It's been working its way up. This thing is trending. You got a low to a high, higher low, higher high, higher low, kind of went sideways for a little bit, and now it's working its way back up. We had a retracement, okay? And now its prices making higher highs, higher lows, and it's working its way up, okay? So if we can get price to come right down to this trend line, which is, again, this is 31.23, but it's anywhere from 31.40 and 31.50 range, we'd be looking for a good opportunity. So I'm going to say 31. Oops. We're going to say 131, 31.40 to 31.50. Okay, so now that I'm narrowing down, I can see a better opportunities. Now, if we bought here at 31.40 range, you know, this is 23, but it's probably not going to come all the way down here. Then I would be wanting to put my stop. Let's see here. Let's zoom in a little bit more. Okay. I'm going to be wanting to put my stop below these lows here, which is also below the trend line. Okay, so we have two layers of support. We have this layer of support, which is the trend line, which is working its way up, and these lows below the 3 level. Okay, so I would put a stop right here. All right, which let me see what this level is. It's like 29.80. So if we're buying at 31.40, we're talking 160 pips stop. It's a pretty good size. So I'm going to put stop. This is some clients are not going to be able to take this. Let's say stop 1.2980. Okay, and I'm going to look at the profit target to be about 3,400. That's a pretty good run. Take profit 1.3400, and usually what I'll do is I'll back it down to 33.80. 20 pips above. The euro and the pound love the 80 mark. A lot of times they'll come all the way to the 80 and bounce back down, and you missed your take profit, and it drops down another 100 pips. Now you got to close out with minus an extra 100 pips. So we don't want to do that. So now, but that's still a pretty huge stop. So those are good trades, okay? Good trading opportunities on the euro, but the stop is too big. So we need to figure out a tighter level of a stop. Now I know this is a mess. Forget it. I've got pivot points drawn out here, and it's a little bit messy. But we talked about entering at 30, 30.50, 30.40. Oh yeah, see that right there, right in that range. In fact, I'd even tighten it down even more. Let's see here. What is that right there? 30.30. Yeah, I'm definitely going to tighten it down even more in this. Now that we're down to a narrow chart, I can see more detailed. Say 31.40. Actually, this is supposed to be 30.40. Sorry about that. I'm not paying attention. 30.40. Your price can come down to the level. Let's go back to the weekly chart again. Did I mean 31? Yeah, because we have a bottom of this trend line there. Yeah, 31. Okay. And I'd probably add a second position if price broke below the 30.50 mark right here, which has got a solid base level. Then I'd be looking for another buy entry around 30.50. Same here, even on this chart, to really keep this trade a more long-term trade, we're going to have to keep a big stop on this trade. But the risk reward, we're talking about 160 pips risk, and we're talking about 250 pip reward. Or if we get the second entry, it'd be even deeper. Now this is the best entry. If we could get price to come all the way down to 30.40, then I'd be willing to put a buy order there at 30.40. Let's see here. So I'm going to put one here. Oops. By 1.3040. The stop would be I'd keep a really tight stop if it came down to that level. 29.75, we'll say. 29.75. So I have 3 orders. I would be looking at 3 key levels I would be interested in buying. Now the buy opportunities are going to be more safe. The sell opportunity is going to be we should see a strong bounce off of that. We might get 50 pips, we might get 100 pips. So we will nail some, and I will end up putting probably a 60 pip stop on this one, because I know we can get 60 pips bounced off that. Historically, off that 3,500 level, this thing bounces pretty dang hard off that 3,500 level right here. I mean, price came up and bounced down. We're talking 500 pips, so we can definitely get 60 pips. So if we put a 60 pip stop and we can get a 120 pip run down, then we have a 2-to-1 reward to risk ratio on that trade. So there we go. That's it for that trade. And now let's go look at the pound dollar. Now guys, I know this is taking a long time, so I think what we're going to do is focus on analyzing a handful of these trades at once, and then I will end the video. I'm not going to look at every single currency pair that I'm looking at, because this is going to take us too long. Okay, the pound. Okay, let's look at the pound. Okay, the pound has kind of been range bound. We talked about ranges. Starting here, it's been ranging, which is, we're talking about, oops, take that off. Started in this range right around here, which is July of 2010, 2.5 years ago. It's been ranging. There's 2 ranges. There's this range, and then there's the full macro range, and then it's went into another range. But you can see here, right here, the 6 mark, where this pair is currently at 1.600, is a solid support level. All right. Price has been going sideways in this thing. It's been ejecting off of the 6,300 mark. But this 6 mark is a solid support level. We could see a price action really take a run up on this thing, even though price has been down for the day. The low is 59.74. I'm actually long in this pair right now, expecting it to run all the way up to 6,300, which I back off to 62.80. And so price has pushed its way down to this level, but what I do see is a lot of turmoil in this market. If you zoom in here, you have a strong rejection here. When you see a rejection like this, man, you know that that is a strong key level. So we should have taken another, and I didn't, but we should have taken another sell at 62.80, 6,300 mark. And sold this thing all the way down. Now we did originally have a sell at 6,300, and then I canceled it because price wasn't getting anywhere near it. I should have stayed in that. That's based on a weekly chart. So anyway, price is sitting right at a key level on the weekly chart. So on this weekly chart, oops, it looks like we are right at a good buy level, because price is going sideways, right? It's sitting right at a good buy level. Over the long haul, it's slightly up. It's up and sideways, and then it seems to be working its way back up again. All right. So I would, on a weekly chart, say Great British Pound, buy at 1.600. Okay. And we can have a tight stop on that. I would say 80 pip stop. 0.5920. I would pull the plug way sooner than that. If price breaks below yesterday's highs tomorrow, then I'd forget it. So that's a good buy opportunity. Sell opportunity would be 6,300. I'll worry about that later if price gets up into that range. In fact, you know what? I'm just going to put it in here. Sell at 1,6,300 if price can get back up there again. My goal is I'm not going to send all these signals out to our customers. I'm going to send the signals out, the trade alerts that are going to be focused on where the market's at currently. Okay, so now let's go down to a daily chart. Okay, so what we've seen on the pound is it's kind of going in a sideways channel a little bit. All right, so you can see that that's kind of messy. Just zoom in a little bit more. That price is sitting here. What is that line? Is that the 200 EMA that got drawn out here? Yeah, I think it is. Yeah. Okay. So you can see here that price is trending up. Okay, it's going up. We're getting higher highs, higher lows. It's working its way up. See? And price has come up to this level here. We're still trending up. So I'm going to actually draw another level of support, which is called a Fibonacci. And I'm going to draw this. Let's get that out of the way first of all. I'm going to draw another fib level in here. That's a lot of Fibonacci levels. It's kind of messy. I'm going to delete this one because that's past. Let's figure out where we're at. The price has come up to from this low to this high, and it's come down and broken slightly below this the 62% retracement, which for the pound and the euro, 62% retracement is a strong key level. Okay, so about you're also going to notice here that the 62% retracement line. Let's put a little line here, and you're going to notice that this is also somewhat of a good support level. Okay, so I'm going to say that this level here, which is 60.17, is a pretty solid support level. Okay, so I think the base that we have here of 6 is solid. The key is, here's what we don't know yet to this point, and this is the trick. This is what you got to understand, that this is not a business of guarantees. We've had 10 winners in a row and never hear from a new customer, though. So we have 2 losses, and somebody send an email to us saying, "Are you guys idiots?" My gosh, man. I mean, come on. The reality is, this is not a business of guarantees. This is trading is about probabilities. Your goal is to choose the highest level probability trades. And if you focus on a solid equity management plan, which you can find on our website, and you're sticking to the technicals and taking your time, that long term you can be a winner in the Forex market. Whereas 90+% of the Forex traders, if not more, are losing because they don't understand a lot of these principles. So you can see price did break down and it rejected and is working its way back up. So it's showing again that price is holding above this 6 mark all the way to the 60.17 mark, which is a 62% retracement, and the 6 mark is what's called the figure. Excellent bounce opportunity. And so we could see a nice little run up as long as this trend continues. But here's what we don't know. At any time, we could look back and find that this pair dropped all the way down here in the next 3-4 weeks, right? And then we'll look back, hindsight is 20/20, right? And realize that this turnaround wasn't a retracement, but it was a trend reversal. And that's what we don't know. That's what we don't know at this point. Is this a trend reversal, or is the trend going to continue, bounce up to this level, and shoot past this old 6,300 key level, which if you look at here, 6,300. Let's draw this out. 6,300. Bam. Huge reversal. Bam. Good size reversal. Bam. And if it continues doing what it did before, then it could go all the way down to this level here. That's what we don't know. So the current trade that I'm in with a pound, I do expect this thing to go up a little bit more, at least to get myself out of this trade. But man, the big issue here is, in fact, I wish I would have sold this again at the 6,300 mark. Like I said, I canceled that. I do believe I canceled the trade. We may have taken one. I think I had 2 trades in there at that level, and I think we canceled one of them. But long term, we don't know if this uptrend is going to continue, or if we're going to get the same reaction we have always gotten off the 6,200 mark, which is a dump. Boom. Hits, dumps. Now it's slowly but surely the dumps are getting smaller, right? And it came right back up, tested again, broke its way down. Pin bar, that was a sure guarantee that this thing's dropping. And now we're sitting at this level. So this pair, yeah, it's a little catchy. You may want to focus on day trading this thing. See, you can see that the 6 mark, 1.60 figure mark, has held strong. Okay, we had a small pin bar there. We could see a good buy here on a short-term trade, to take a little short-term trade on this on a intraday level. Daily chart, same thing. Price came down to the 59.80. Remember I told you earlier that the 80 level on the euro and the pound are very strong. And it came down and rejected right off of that. Now, if you understand those things, and you understand the daily range on how these pairs and how that works, and how the currency pairs work like with a rubber band effect. In fact, we're going to get more detailed into that into the training, the Forex training course. In fact, this video I'm doing right now, I'm actually going to put in there as well. We're going to put a lot of the Forex market updates in there because it's so much detailed training info that I think you need to add that in there. But price is currently rejected off that 59.80. That would have been an excellent place to take a small trade. You put a 30 pip stop. You could have right there made a nice 30 pips, 20 pips. You could have put a tighter stop. We want to see price break above the 6 mark and hold. See how the 6 hesitating, bounced off. Now it's the support levels now become the resistance. We got to see price break above this. I actually bought in here at this key level, and I'm now waiting for price to run its way back up. So on this pair, I'll just be very careful because it's showing potential for both. It's showing because long term the 6,300 mark is showing some serious long-term rejection. But at the same time, we have this base at the 1.6 figure mark that seems to be holding as well. So on this pair, other than the trade that I'm in, I'm not going to be adding any more. I'm more interested in what that euro is looking like at this point than I am on this pound trade. So let's look at the yen pairs. And I got a lot of customers asking these questions. Why didn't we get on that yen trade? And we did take some trades, guys. We did take a few trades on the yen cross pairs. They get the USD yen, the pound yen. Let's look at the pound yen. And you'll see that, my gosh, man, we're talking about, it was already uprange. And once we hit around this date here, oops, let me take that off, which is, let's see what this was. Man, I just messed up my trend line. A couple days, yeah, November 11th, 2012. This thing is taken off. Oh, let me see here. 1,000 pips. 1,000. Let's see here. Let's 126. No, not 1,000. Sorry about it. 136 would be 100. Let's see here. Several hundred pips. I mean, this thing is just rock and rolled like crazy. In fact, if we break down to a weekly chart, it'd be easier to do a pip count, I guess. Right around here is where this thing just exploded. In fact, really, since June, this thing has gone from 120 all the way to 145, which is, yeah, I am right, 2,500 pips. I mean, it's insane, guys. But the problem is, this is a problem we're running into. This thing has no signs of slowing down, obviously, but you can't just click in and jump in a trade. We have to look for an optimal entry. So on the dollar yen, to get in on this pair, the only thing I see here is price hit this key level here. It had a rejection, an issue here. Let me zoom this. Price struggled right here previously. Okay, a few days ago. This is the daily chart. Oops, I just deleted that. Sorry about that. Price struggled in this area. And you see it hesitated, came back down 100 pips, and then shot back up, broke through. Okay? And like any pair. It doesn't go straight up. It goes up, down, goes in some sideways channels, came down. But here's again, it came down and hit the 80 mark, the 88 mark, and strongly rejected that level. Okay, with this pin bar, which means most likely this pair is going to continue to go up again. So we could take a buy opportunity. In fact, I'm going to say buy market. Okay, say USD JPY buy 88.40, because mine will probably be in that 40 range. I'm gonna put a 60 pip stop, so it's 87.80, and my profit target is going to be at the 88.90. Okay, my take profit is going to be 88.90. I'm at 88.80. Sorry about that. We'll just round it off to the 80s. Around the 88, 89. Sorry, man, I can't even talk, man. 89. So we're talking about a 60 pip risk with a 140 pip reward. That is more than 2 to 1. That's an excellent ratio. Let's go look at the daily chart, the weekly chart on this, to make sure I'm seeing the same thing. Same thing. This thing is going up, 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 up with no hesitation. I'm expecting it. Now we are at a key level here. Okay. So, which is why we had a little bit of a kickback. But it looks like price could most likely continue and drive itself through this level and not even stop for quite a while, all the way up to this 9,500 range. That's what I'm going to expect. I mean, there's so much momentum on this. I'm expecting, and the yen is getting weaker and weaker right now, which is strengthening these pairs. This is why we're seeing massive strength on these pairs. Same thing here. Pound yen, price came down. Rejected again, same thing. Euro yen, let's look at that and see how that looked. Especially since the euro has really been strengthening the last few days. Came down. Let's see, this would be an excellent opportunity to buy. If price would come all the way down to this level here, right at the 115 mark. Yeah, that's been an excellent entry point on this pair. Let's do that. But we have a pin bar, a kind of pin bar-ish forming today. So I'm going to guess that this little 250 pip drop that this did is going to be over, and this trend is going to continue. So again, we're looking at buying opportunities on these yen pairs, especially the euro yen. I'm more apt to buying the euro yen right now than I am the pound, because the pound's showing different kind of signs. I'll buy it at 45. It'll probably get a couple ticks down. The stop loss on this sucker is going to be the same thing. To find a good stop, I need to go down to a 4-hour chart, see what I can find. I'm going to say a good stop for this would be right here, right below this level here, 116.24. Let's just say we see 116.20. 16.20, and the take profit we're looking at is we're going to try to close this thing at 120. So we're talking about a how many pip stop? 125 pip stop for a 250 pip run up. So our risk to reward is 1 to 2, right? We're risking 120 pips, but we're planning if the trade goes our way, we'll make 250 pips. Now, if we're risking 1% across 125 pips, we lost 1%. If the trade goes for us 250 pips, like we're hoping, then guess what? We just nailed on that thing, 2%. Okay, so that's how we want to focus on solid equity management. Take profit is what do you say? Actually, I don't ever do 120, 119.80, right, or 85, just to be up in that range, because it may not quite hit like on this trade right here. Oops. Let's see. This thing did not come all the way up. See, it hit 119.97. If you put your take profit at one, and you bought this thing and take profit was at 120, you would have been taken out. You would have missed your take profit by 3 pips. Price then turned around, and dropped down almost 400 pips. Right? Most of your profits would have been eaten up. So that's what I'm looking at on that pair. Let's look at the dollar Canadian, because we've been trading this pair for the last several days and had a bunch of winners. So we just closed up profits today, and now we're going to be looking at taking another one. Hold on a second real quick here, and we'll dig this up here. So what we've been doing on this USD CAD, it has been trading in this little range here. Now the pair is still trading its way up. We have a low to a higher high, to a higher low, to a higher high, to a higher low, to a higher high, right? Did a retracement, it's pulled back. Now, when we talk about support levels can be multiple different things. It could be the figure, like 1.00 is called the figure, and that is usually a mental support resistance level. We also have trend lines, right? Trend lines. Okay, I wouldn't say that's a real solid trend line here because of how it works, but it could be useful. But you can see that price is somewhat holding on to this level here, but where that starts, it may not be right there. Part of trading is you've got to be able to recognize patterns, guys. That is probably a little bit more stable right there. But we're sitting here, price is holding below this 99.80 level. Now what I've been doing over the last several days is we've taken a lot of buy positions down at around the 98.45 range, 98.45, 98.46, and we've been taking 15 to 30 pips off this thing almost every single day. Okay, price came down today. We closed out some profits, 30 pips on this thing today. In fact, you can see price actually moved. Actually, let's take that off. From we were at 98.46. It went down to 98.37, so it went down 9 pips and went up to 98.76. So that's exactly where I ended up closing my profits out on it, and then it came back down to 98.59. And it's working its way down. In fact, if you look at a 1 hour chart, let's close that. The price is again stuck right here at this level. This is 60 mark. And I'm expecting that we will eventually get this thing to come back down. I've got a new order in at 98.45 to buy again, and all in this range. And when you talk about pip spread, you need that extra boost to push that thing down. But I'm expecting this thing to hit again and continue. But it is, over the last couple of days, working its way upward, sideways, but upward, slowly. See that? Now what I need is this thing to really break above this 98.80 level and take off. That's what we're really looking for. But the goal is this thing has gone up and down, up and down, up and down, up and down so many times that if we would have stayed in the original trade, we wouldn't have had those pips. And so we're gaining like 1/3% at 1% risk every single time. This is like the 4th trade that we're on right now. So we've done very well on this little trade. But we haven't gotten the major breakout that I wanted to, which is to have price break above 98.80, 9900 and take off to the 99.80 level, which is what I'm shooting for. But it is still trending up slowly. Okay, so that's what we're looking for on that pair. On a weekly chart, it's not really much to show on a weekly chart, but this 30-minute chart, you can see it's still ticking its way up. But that's what we've been looking at on that pair. Is we've been taking small moves on this. Got to stop down in this range here to really protect us, because we're looking for that run up. But when price has gone and starts hesitating at level again and just doesn't want to break through, I've been closing my profits, resetting the trade, and we're like on our 4th or 5th trade right now over the last week and a half on this USD CAD. Happy with that. But what we're looking for is when we take that buy opportunity and price breaks above that level and it explodes like it did here on the way down. So that's what we're looking for. We're kind of seeing this thing kind of doing this rounding off thing right here. See? So which is showing that we're getting more, that the selling pressure is weakening, and potentially we're seeing some buyer pressure push up. So anyway, that's the USD CAD. Aussie dollar. Let's look what we got here. Now we traded the Aussie dollar the other day, and I think we hit 80 pips on that thing. I can't remember offhand. I don't have my numbers in front of me. But this is the weekly chart, and you can see weekly wise we are in a sideways channel. All right, and have a solid base here. Key level, key level. In fact, we're about to hit this key level again. I'm going to drop this down because there seems to be right here is the better key level. But we also have a slight uptick going on the weekly chart. Oops, I did not mean to knock that one out. Okay, let's grab it here. That's not going to want to do that. All right. That's not going to draw out real clear. Actually, you know what? It does. If you look at it, price was coming down, coming up off this is trend line. It broke through, and now it's hesitating at this level. So this is the big key right here. Is price going to continue pushing its way up this trend, or it's going to hit and do a dump off? So it's kind of up in the air right now. I'd just be very careful. If price breaks above this key level strongly, then I'd be looking for a buy as it comes back down to this level and take that thing back up. But we could, if price breaks back down, I would be looking for selling opportunities when price retests this trend line again. All right, New Zealand dollar, US dollar. Let's see what we got. Okay, that trend line was broken. It was going into you can see that earlier on the weekly chart that this trade had two trends. It had a slow downtrend as well as a bottom level uptrend, which is squeezing itself into a pennant. Well, ultimately, boom, in one shot, 1 week, the price broke it, came back down, came down to this level, and is now working its way back up. You can see here that we do have a key level right in here where price is rejected here, 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 and now it's working its way back up. So we could see a rejection off the 84.60 to 84.50 range and see the New Zealand dollar weaken, go back down against the US dollar. But again, it could also break back up because it's already retested the line last week. Strong rejection, and it's now working its way back up. So usually when you have a strong rejection, it sort of starts working its way down. But on a lower time frame level, let's go to the daily chart. We could see a rejection off of this level. In fact, I'm going to put in an order in here to sell 84.57, 84.55. I'm going to put a tight stop on this too. This is counter trend somewhat, because what we don't know is if that is going to be a reversal point. That's what we're looking for. Let's see, 8.84. I'm trying to talk and type at the same time. Apologize. 84.50. And I'm going to trade this straight off the daily chart. So I'm going to put a stop at 84.90. Real tight one. Okay. Stop. Let's put a stop loss. Okay, now take profit, I would most likely say from this that price rejects off the scan. We're going to come all the way down to this 83.50 mark or lower, but at least there I would at least pull profit originally off of 83.50. So just go a little bit above and say 83.60. 83.60 is my take profit. So we're talking about a risk to reward, a 40 pip stop with a 90 pip reward. So we're looking at a really strong risk to reward on that one. I'm going to narrow down to the 4-hour chart too, just to verify those levels. Yeah, 84.50. Yeah, and we have a stop up in this range here, so that's pretty solid. But it is trending up, okay? But so I would be looking for a nice run up over the next day or so, a rejection. In fact, you know what? Yeah, we'll just shoot for that. Yeah, that's what I'm thinking. We may end up closing out profits early once we get up 40-50 pips. I may just go ahead and close out 50% of the position and move the stop to break even. And it locks in some profits to make sure we don't take any losses. Aussie yen, I think was earlier, same thing. The Aussie yen, oh my gosh, this is probably one of my favorite currency pairs to trade. But this thing has run up since. Why does that thing keep staying on there? Around October, So 3 months ago, going from 8 all the way to 9,500. So we're talking about 1,500 pips. And again, you guys are looking for key levels to buy. This 90 mark is a huge level. In fact, if we zoom it in, yeah, I'd be looking to buy at 90, but I don't think we're going to stop here. I think we see this pin bar reversal. I think this thing is going to continue skyrocketing up. And in fact, I'm going to look to buy this thing at 93.40. Well, actually, you know what? We're not going to, because again, what we want to look for is a key level for price to come down. And if price keeps going up, we're trading in no man's land if we're not very careful. Okay, we need to, because the nearest stop that we can put a stop on this thing is way down here. I'm going to put a 200 pip stop on this trade. I don't think so. I'm not really interested in that. Let's look at a couple more trades here. The Aussie, the Euro Aussie dollar, Euro odd. Let's see what we've been doing on this. Hey man, where's my charts? Okay, somehow I screwed up my charts. I didn't get my weekly charts open. Oh, there it is. Okay. On weekly wise, the euro has been weakening against the Aussie. Okay, so long term, we're looking at weakness. So we need to keep that as a factor in mind. But short term, since August of 2012, the last 5 months, this thing has been ranging up. We had an upswing, came back down. It's kind of holding true to this trend line still. If we extend it out, broke down below it. Oops, it's got messed up. It's not perfect. Broke back up above it and it stayed there. So it's still working its way back up. I would say, because we have this base level at 25.38 to 25.40 range. And this thing is trending its way back up, that we could see the Euro Aussie hit. This is a double confluence, 2 levels of support. That right here, the 25.40 range, we could have a nice buy opportunity. So I'm actually looking at that trade. Yeah, I'm going to have to watch it. I'm going to watch price action on this thing, especially on the lower level time frames. Where's my hourly chart? To see how I feel about this. It's been working its way down, the euro against the Aussie, but I think we said we wanted to buy 25.40. Let's see here. Yeah, 25.40 range. Let's look at where that looks like on the hourly chart. Let's look at a 4-hour chart first. $25.40 is right in here. That's a solid level here. Yeah, the problem is what we don't know is this push down is it exhausting? It looks like it could be exhausting. Anyway, I'm going to hold off. This pair can move so fast. This is a very tricky one. I'm going to hold off on this one a little bit, but I'm going to look at the euro pound. We traded the euro pound and took out some nice profits on that yesterday, and I am, for mirror trading customers, I'm actually back in here again. Weekly on euro pound, euro has been strengthening against the pound since July 2012, late July 2012. So for 6 months, this pair has been really moving. 1,400 pips plus almost 1,500 pips. So we're going its way up. We do have a key level here at 8,300, which is why I sold this pair. We took some profits and we sold it again. And we are still in the middle of the week, so this candle is still forming, which is why it's light blue. But we did have some rejection. And you see 8,300 is a huge support level. See all that? Strong, strong, strong. Let's just dig down to the daily chart. Oh yeah, this is when I was doing a little training thing. You can see all the ranges that this thing has been in. In fact, you can see it was ranging here too, which did very well. Broke out once, you probably would have got stopped there, but the rest of the time you could have kicked some butt. And now we got a little the trend line has changed, but it's still trending in the same direction as it was before. It's still trending. In fact, this thing needs to be pushed down a little bit more. It's still trending, and it's this original trend. Oh my gosh, look at that. See, now you have trends within trends. You see how that works? This trend line is held strong, 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 and now it's right there. So the trick that we're at right here with this pair, we do have a solid level here. Okay, but we still are in an uptrend, so we can easily see this pair break up above that. I'm going to keep an eye on this. I am short this pair. I'm hoping we get a nice little rejection below this trend line. If we do, then I'm going to see that price could be shooting down because we have a double rejection of the trend line plus this key level of 8,300. That we can see price come all the way back down this 8160 mark right in here, down to the bottom of this trend line, right? So that's kind of what I'm hoping for right now. But we could also see that price would break and squeeze out. Imagine you grabbing a little water bottle, when you grab that thing and squeeze, eventually the pressure explodes that thing and it shoots up. So we could have that too. I only have a 50 pip stop, so if we get stopped out, we get stopped out. But the reward on this potential is pretty significant. So that's where we're at right now. I'm not sending that trade to Pro Signals direct customers. You're welcome to play with that all you want, but I'm just telling you right where I'm at, why I sold that pair. But at the same time, there is a potential for a break up. So anyway, that's it for today, guys. I'm going to go ahead and focus on that. Again, this information and so much more detail is going to be in my training course coming up. It's normally $597. It's going to be starting the initial release next week. But if you, there's a link underneath this video that you can get the training course for free. I highly suggest you click on that link and take a look at what we're offering. And you guys have a great one, and we're here for you as much as you need help. And happy trading.